Hello, everybody. I am Vicki James, and we are here for Thrive Hive Live. We are on step 15 of 21 steps to launching your business, where we talk about the nuts and bolts, those things that people don't like to think about, that we hide in the desk drawers and try to put the blinders on. And today, with one of those bigger topics, understanding your tax obligations. So a little bit more about the 21 steps as we started off with steps 1 and 2, finding out your why of launching a business, what your offer needs to be, something you love to do, are good at doing, and other people need. And we started building on from there, talking about our networking, our first landing page, and our finances was a couple weeks ago. And then today, just kind of getting a head start on financial obligations, like the tax obligations, understanding what's to come as your business starts making money. And next week, just a little preview, we're going to talk about finding your marketing channel. So is it LinkedIn? Is it Substack? Is it what is it? We'll talk more about that next week, so you can understand where to find your people and market to them to get more clients, to get your clients sooner. All right, so we are live. If you're with me, please drop a comment, not only just for me, like that lets me know that you're in the room and I can say hi, but also, comment to each other. So I'll be asking some questions, not too many, but a couple along the way. Would love to see your answers in the comments, have an opportunity to respond to each other. We've done a really good job of that so far through this series, but also I'm curious where you're at and what you're building. So yeah, please do share in the comments and connect with each other. If you're watching on LinkedIn and you're having a conversation with somebody in the comments or you see what's out there, go ahead and send them a connection request, because Thrive Hive is all about community. And believe it or not, even through a LinkedIn Live, you can build community. So participating in the comments, chatting to each other, connecting with each other is a great and wonderful thing to do. Before I move on too far, I wanted to let you know too that we do have a workbook available for you. And if you go to the description of the event, you'll find some links that includes a workbook that you can download, more information on the series. Also, I have an assessment for you if you're wondering, like, oh, what 21 steps, what's out there? What do I not know about? The assessment will help point out maybe things you hadn't thought of before and help you prioritize maybe where some education will help you build your business with confidence. But really, we're about community, education, community, talking to others, working with others that have been there before, for me has been the single most thing that's helped me move my business forward. And we see it in Thrive Hive all the time, just having a community where we can ask questions. How did you do this? Do you know nobody does that? Can you read my webpage? Tell me how it reads. All that stuff is wonderful. So that's what we're all about. All right, I think I got all my preliminaries out of the way. So let me throw well, before I do that, I'll show you where we are. Whoop. And this is, there we go. We're nearing the finish line here. So again, 21 steps to launch. Today we're on step 15, tax obligations, and then we'll be moving on to marketing channel, talking about content and lead magnets, and nearing the end of the series. So exciting, exciting. All right. And then somebody asked me today what I'm going to do when the 21 steps are over. I'm like, well, first I'm going to take a break and then we'll see. All right. So on to preparing for your tax obligations. Now, I do want to kind of talk about, it's helpful, it's essential to understand what's to come, even when you're pre-revenue or pre-profit, because understanding what's to come allows you to prepare for it. So that's what this is about. And it's not a deep dive. It's pretty high level, and it's more to help you understand where you may need to find some support, where you may need to find some information. And then this workbook has a disclaimer on it. I'm giving you some general information. I'm going to talk broadly. I'm going to give you some kind of broad guidance, just like the bare minimum to get started. But please talk to a tax preparer in your local area when it comes to your taxes, because they know the rules where you are. They know the rules, what's happening. So this is just meant to be broad information to help you get started, so you know when you need that help, so that you prepare ahead of time and don't have any nasty surprises down the road. So, all right. Okay, so moving on, I want to tell you, this is a story, and this, when I was was a bookkeeper many, many years ago. I had a contractor who was a client, and he built houses. He had a small crew, nice guy, tried to do all the right things. And he had been paying his employees, and he'd been, taking the taxes out of the check like he's supposed to. And by the time I came in and started looking at his books, I made a big realization. He was taking money out of his employees' paychecks, but he didn't know what to do with it. So it was just whatever. And he owed about $30,000 to the IRS by the time I came in. And it wasn't negligence on his part. It wasn't anything that he had intended. It wasn't malicious. It was just he had a knowledge gap, and it ended up having a big bill. And that's what makes me really passionate about making sure that folks understand, even if you don't have to pay taxes yet, understanding when you need to start talking to people, what you can do to prepare so that you're not left out in the wind. That's what we're here about, going to talk about today. So and this was an extreme example, but it can happen to anybody. And the thing about extreme examples is usually it starts with one little misstep and it can really snowball. So that's why I'm passionate about sharing this topic with you today, and I hope you'll take it to heart. All right. And I did want to mention too, like often when we think about taxes, we're waiting until we're filing. But if you're not prepared, if you don't understand those obligations, set some money aside, understood what your obligations are, it can really create a financial strain when those tax obligations are due versus planning for them. And also this helps you understand what money you have available for your business. What's your actual profit? Where can you invest? What's going on? So really it's about planning ahead for those taxes. We're not talking about the filing, that's after the fact. We really want to make sure that we're planning our business with taxes in mind. Hi, Patrick. All right, so starting with that, the first thing I want to make sure that comes to mind is that what you take home at the end of the day isn't what the money you brought in, your profit, but we have to take into account the tax burden in addition. So simply saying, if your goal is to bring home $5,000 a month to pay your bills, that's what you want to draw on the business. You don't need to make a profit of 500 before taxes. 5,000, you need to make more of a profit somewhere around, 9,000 or 8,000. It's higher than that. So just being really aware that your revenue target or your revenue minus expenditures has to allow for the payment of those taxes. And then you get to take home what's next. And so it's really easy to think about, if I just make 5,000 a month, that's easy to do. No, you need to bring in more than that because there's going to be taxes involved. And depending on where you're at, those taxes are going to look different, because I'll talk quite specifically about federal taxes, but then state taxes have a burden with them as well. And kind of like the contractor story I was talking about, another thing to be aware of is if you withhold taxes from an employee, you're just passing that through. You don't get to keep that. And it's, your tax preparer can help you understand the process to make that happen. But also, if you're selling stuff, or if there's taxes on services you offer, if there's taxes you're collecting on behalf of the state or your city, again, you need to plan for, you're not keeping that money, that's going to be paid forward, typically quarterly, but we'll talk more through that. So just really bringing acute awareness to that fact. All right, moving on. So when we think about the taxes, one thing that I hope you'll take away, and I'll repeat this towards the end as well, is if you're doing nothing else, if maybe you're early, you don't have high revenue yet, you don't think you have taxable income at this point, the one thing you can do that's going to save yourself a lot of headache down the road is take 30% of your profit or 30% of what's coming in and just put it aside in a bank account. Because when you find that suddenly you went from, now my tax bracket went from 0 to 15 to 22 to 32, we want to make sure that you're preparing for that and not surprised by it after the fact. And we'll talk more about some of the implications of not doing that as we go through here. So there's a lot going on here. And again, we'll talk more about federal and city and state and even other countries because I'm in Spain. But I'm kind of curious right now, is there something in your taxes that feels a little bit murky? Because I think it's easy to put on the blinders. I'll figure it out when I need to. I'll figure it out when it comes time to file. But let's start maybe asking those questions now and try to, uncover the fog, try to lift the murk and see if we can plan ahead for those things so that we don't have a surprise such as Steve did back in the day. All right, so moving forward, there's a couple basic things worth knowing early on, and we'll focus on this. One of the big things to be aware of, if you're leaving employment and going into your own business, one of the things that may surprise you, maybe you know this, is there's a tax called FICA, which is basically your Social Security and Medicare. And when you're employed, as an employee, you pay 7.65 of that. And your employer pays the other 7.65 of that. However, when you're self-employed, you pay both sides. So I just want to make sure folks are aware of that FICA bill is going to play into the overall taxes that are due, and understanding that ahead of time will help you see why I'm recommending maybe 30% set aside in the beginning until you have better numbers, just so that there's something happening. And then the income tax. So you're going to have the self-employment, the FICA, but then also your income tax is going to be based on the profit of your business. And we'll talk about deductions in just a minute as well. And so when you take into account the income tax on the profit of your business coming from the Schedule C, plus your FICA, again, that's where we're getting to that 30% as kind of a starting number. And again, this is just the early number to help you get something set aside, but please work with a tax preparer for your specific situation so that you can get all of that planned in appropriately for you so that you're maximizing your savings, you're getting your payments in on time without any issues or penalties. There's a lot happening there. All right. And also, so a lot of the taxes that we pay as self-employed people is based on our profit, but not all. And it depends on where you're at. So there's some jurisdictions where it might be taxes based on what you brought in. So maybe it's a service you offer and your state says, you pay for all revenue all revenue brought in, regardless on if it's profit or not. And that's just something to be aware of is, understanding what's happening in your local jurisdiction, so that you don't get, again, we want to avoid surprises. That's what this whole lesson is about. Make sure we don't have some tax surprises next year, but we're planning this year for what is going to be needed. Which brings me to our estimated quarterly payments. Now, when I talked about the federal income tax and the FICA, the IRS will penalize you if you kind of get too much of a tax that's what I'm looking for, expenditure without giving them a little bit of money along the way. And so typically what happens for a business that's established and is on a regular cadence, every quarter, your tax accountant will help you figure out how much you need to send to the IRS today. And that's kind of a prepayment for the year. So right now it's May. Come June 30th, hopefully the quarter one was submitted in January. Not January, April. Your quarter two will be submitted in July. So typically what happens is you look, okay, well, I got my quarter one set aside and I paid my estimated so that I'm not going to end up with a penalty for that. And then Q2, we're going to do another quarterly payment. Or if your revenue is still really small, you might not be required to do that. Or maybe starting quarter two or quarter three is when you need to do that. But again, that's why we're going to work with a tax accountant to help us understand when to pay what, so that we do not find ourselves in a position of penalty, and but at the same time, we're maximizing our interest and savings and that type of thing. And then I like the quarterly system because most, and again, not all, but most of our taxes are filed quarterly. So these are, once a quarter is when we really need to dig in to understand what is our revenue, what are our expenditures, what is our tax burden, do we have money set aside, do we need to prepay anything, and get all those filings in. So quarterly is the magic number for that. And I just want to quickly touch on some common deductions. So if your tax burden is based on your profit, such as your federal income tax, then that means that expenses you have towards your home office, equipment, mileage, like all of these things help to reduce that tax burden. And I don't want to get into too much detail, but your home office, if 10% of your home is dedicated to an office, then you can take 10% of your expenses to run the home has an office expense. Mileage, there's every year there's a new rate published that is, I don't know what it is today. I was going to say 50 cents a mile, but it's probably more than that. And so keeping a mileage log and then, taking those miles and applying that rate, it gives you another tax write-off that you can do along the way. Professional development, your professional services, such as your accountant or any legal services, a lot of your bank fees and general office expenses are things that you can track that will help you reduce the tax burden when it's based on profit alone. And then, general note about AI, my own personal feeling, and it fits well in here, is that AI used well, like you're good at prompting, you're good at testing it, you're good at pushing back on it, can get you about 80% of the way there. But it's never going to replace talking to the professional, talking to the person who studied this, who has filed, who has had conversations with the IRS or the state revenue office. That's the person that's going to help keep things super buttoned up. So again, AI can help you get a general understanding, 80% of the way there. Now you're not totally lost, but really working with that tax preparer to get on the other side is what's going to set you up for success. All right, and in the workbook included just a little cheat sheet here so you can start to think about some of those deductions that you can take so that you are getting the right tax bill, that you're able to write off enough of those expenditures that you're doing the best for your business. All right, and then geography matters, and there's some complex stuff going on here, but I'm going to keep it pretty high level. And again, that's part of the reason why I want you to be informed, but you're going to work with the tax preparer to get everything right for your business. So federal is pretty easy to talk about. There hasn't been a lot of changes there over the years, but every state, every city is very different. In fact, I had a potential bookkeeping client who is in Portland, Oregon. And she's like, there's like this whole separate thing going on and I need to track. And so we really have to understand not only where our home office is, but what's happening in other places. And there's this concept of nexus, which basically says, now the state cares about what's happening because you need to file taxes. And it looks different everywhere. And this becomes kind of a bigger issue when you're in this, e-commerce world, if you're selling things. And so as an example, Ohio says, yeah, we really don't care if you're selling things to people in Ohio until you hit $100,000. Once you hit $100,000, now we want you filing taxes. We want you collecting that sales tax. We want you sending it on. And so understanding what nexus is, and really it's that trigger point for when the state cares about what you're doing in your business so that they can get their cut. And it's different for every state. Different cities may play into that as well. And that's another reason why it's so important to have a tax accountant who's knowledgeable in the jurisdictions or those locations that you live, that your office is, that you're doing business in, and can easily maybe involved in e-commerce so they understand what happens in other states, other cities, so that they can get you set up right. So nexus is the magic word there. My own case is a little bit different. I am in Spain myself, kind of a digital nomad, but I'm actually here. And and there's a lot more people doing remote businesses from afar. And so understanding how that impacts things might be important as well. For myself, I have a general understanding of I will become a tax resident here in the next month or so. I will hire a professional to make sure I do everything I need to do correctly. And I know that Spain works very different. In fact, in that case, like even though currently I do my own taxes in the US and Washington State, I'm not going to do that in Spain. It's too complex. There's too many forms. There's too many nuances. I'm going to hire a professional to help me get that done. And so really understanding that different jurisdictions, different countries may have things you need to lean into as well. And if you're a digital nomad, find an accountant who's experienced working with nomads wherever you are. You probably don't have as much of an issue there because like with Spain, I become a tax resident once I'm here 183 days, which will happen in July. Until then, I'm free. But the goal is to know. If I didn't do any research, I could just fiddle along all year and then find out the hard way, oops, there's something going on here. So you do want to find the right help and the right help for where you are. So if you can find somebody, local like me, I'm going to look for, they call them a Hester here in Spain, and that's kind of like a paralegal bookkeeper, tax filer type person. And I'm going to find somebody that knows, Spain, knows the province I'm in of Valencia, and has worked with people in the US before to help me keep things straight. And now, maybe you don't need somebody with all of that, but they should at least be kind of experienced at discovering what's needed and helping set you up for that access. So you might want to ask some questions like, are you familiar with the tax requirements here or there? Have you worked with people that have, sold items in Ohio or Portland before? And if they're like, oh yeah, we know how to file in Portland, we got it all down, you're good to go. But that's what's going to set you up for success so that you don't have a big surprise at the end of the year. And that's really what I hope you take away from here is how to avoid that very expensive surprise. Now, I'm going to tell you something that's not in the workbook. I probably will put it in the next version. If the most unfortunate thing happens and you end up with a big, and this is specific to the IRS tax bill because something didn't go right, maybe the estimated payments didn't happen, or you underpaid for whatever reason, this is another time where you can bring in a tax preparer or a CPA, somebody who's registered with the IRS. They can help you work with the IRS to get onto a payment plan that makes things more breathable. So if you were to ever find yourself with like that big tax bill, don't panic and run away. Get the tax professional that can help you work with the IRS. And they can do things like negotiate payment plans, reduced rates, maybe get some of it forgiven depending on the situation. So if that ever happens to you, please hire an experienced tax professional who's worked with the IRS for a payment plan. It'll make your life 100 times easier in that situation. But if you start with setting aside 30% of your profit every month, you work with the tax preparer as you're earning income and start at the beginning, it won't be a problem. You won't even have to think about it. All right. And yeah, so I think I'll end. Oh, sorry, I forgot to be flipping my pages here. Nope, not that bad. All right. So bottom line, if there's two things that you remember from this and nothing else, it is number one, set aside that 30%. And again, this isn't like, I'm not promising that you won't have a tax bill. I'm saying that's the amount of money that will give you enough cushion to respond as you get clarity. So this is to create a cushion so that you can deal with the reality when it happens, when you have that clarity, but it's going to be something so that you're not completely caught off guard and left in a really bad situation. And then the other thing is the understanding that however much money you need to keep, the bills paid and the food in the refrigerator, all that kind of stuff, understand that your taxes are going to impact that. So whatever you think the revenue you need to bring in is, you're going to have to bump that up in order to accommodate that tax burden as well. So those are the two things that I hope everybody walks away from this this video understanding, because I want you to build your business with confidence and without fear, and those two things will help you out there. All right, I kind of breezed right through that. So, wrapping it up, definitely understand the difference between, we're talking about planning. We're talking about making sure you have your cushion, that you have your plan, that you understand what's going to happen as you start making revenue and as you start, making more profit. And as you're doing that, you're going to work with the tax preparers so they can get you set up crystal clarity. You know what's going to happen. Before that time, setting that money aside will give you the cushion you need so that there's not a panic. And then remember, part of that 30% is because you're paying all of the FICA, not just half of it anymore, like you did when you were employed. And quarterly estimated payments, an important thing to know. So when you get to March 31st, time to think about, is there something happening? June 30th, what do I need to know? Do I need to make an estimated payment? Do I need to do anything? And then again, September 30th, and then for December 31st, that will happen in January. So it's good to know those dates. Understanding nexus. If you're selling things across state lines or other jurisdictions, how are you going to track those sales to those states? Most of the platforms will do that for you these days. It's way easier than it was 15, 20 years ago, but being prepared for that. And then when do I need to actually start filing? And then making sure you have identified a tax preparer to help you with all of this, because it's too complicated. Even me as a bookkeeper in certain situations, I will use a tax preparer. In fact, I had a business back in 2010 through 2015. And even though I'd been an accountant in the past, I didn't want to have to worry about it. And I had a friend who was starting a CPA firm. So I'm like, yes, please, Erin, do my books. Take this burden off of me and keep me out of trouble. Understanding that as you change location, there might be some changes to your taxes as well. So hopefully this gives you some food for thought. It's not meant to scare you. It's meant to do the opposite. It's meant to open your eyes and plan so that you can be like, okay, I got a general understanding. So I'm not going to fear filing my 2026 taxes in 2027 because I have set some money aside. I have talked to the right people. I have planned ahead. And therefore, I have confidence that I know what's going to happen when it comes time to file those taxes. So that is what it's all about. And I'm just consistently right at that half-hour mark. I did it again. Not as many comments this time. That's okay. These will be available. LinkedIn has in the what's the word I'm looking for? Yeah, the recording will be available there. And I also put these on YouTube as well, so folks can find the information. So with that, I will say thank you for joining. It's been a pleasure, and I will be back next week with our Find Your Marketing channel. And please go look at the description of this event, because you will find some links in there for the course workbook, the assessment on how well do you know the 21 steps, as well as other information that will support you. Plus, I'm currently offering 45 days free of Thrive Hive to join our community, because community is where it's at. Community is where we get support, where we get confidence, clarity, and can really move our businesses forward. So with that, I will say thank you once again, and we will see you next week.